This video will deal with trading stock in the context of the Income Tax Act. There are a number of sets of notes with this. The way that I'm going to do this is I have 3 sets of notes that I want to work through plus a legislation list. There's a set of notes, starts with introduction. There is a suggested solutions to all of the examples inside the set of notes that is kept separately so that you can look at the question and the solution, and you can think of how to do the question without actually looking at the solution first. There is a trading stock summary that each section of the notes is summarized with a description, what notes reference there is, an explanation, and whether it's income or a deduction. A plus means income, a minus means a deduction, and there's also a legislation list that I'm going to refer to. After the set of notes is completed, there's a teaching example for trading stock that I'd like you to go through by yourselves and then go through and mark yourself as well. So let's start with trading stock. So first things first, we need to understand what is included in trading stock itself. So trading stock comprises raw material, work in progress, finished goods, packing materials, consumable stores. So when you're looking at a consumable store, this might be fuel held on a mine located in the middle of a desert, or stationery in an audit company. So these are items that are consumed by the business itself, not bought for resale, but are treated as trading stock. Spare parts are also treated as trading stock, and then purchased goods for resale. Now there's a court case that actually outlines all of this stuff, and I will go through the court cases a little bit later. So this is what the courts have ruled is included in trading stock. So if you see any one of these classifications, you need to actually include whatever it is in trading stock. It's a misnomer that you need to hold something for resale. Packing materials, consumable stores, and spare parts are all treated as trading stock in the Income Tax Act, even though they're not held for the purposes of resale. 1.2, valuation of trading stock. Trading stock is valued in accordance with IFRS. So if you know how to do stuff in accordance with IFRS, trading stock is valued in the same way. So going through an example, guys, what would be included in the cost of trading stock here? Cost of stock, 10,000. That would be included in the cost of trading stock. Shipping costs, all shipping costs are included in the cost of trading stock. If there's any insurance whilst on the boat to actually bring it through to South Africa, that would be included. Any import duties would be included. Would exchange differences be included? According to IFRS, exchange differences are not included into the cost of trading stock, so they're not included. Transport to Joburg. Now, if your factory was in Joburg, any cost to get it to your operations would also be included in the cost of trading stock. VAT, well, it depends on whether you can claim VAT on the goods or not. But as you can normally claim input VAT on most goods that you actually buy and you import, normally VAT would be a 0. At your end, 3,000 in selling costs had been incurred trying to sell the goods. Selling costs are not allowed to be included in the cost of stock. So going up here and having a look at the first line, trading stock is valued in accordance with IFRS, statements and inventories. This includes costs of acquisition, moving and production. Selling costs cannot be included. I will deal with trading share stocks at a later date. You can actually go now and have a look at the solution to this illustration over here. As can be seen, the VAT not included in the trading stock. Here's the value, 10 plus 1 plus 300 plus 200 plus 200. All of these items are deductions, and your closing stock is added back to income at the end of the day. Let's see what's included there again, just to summarize. Stock deducted, 10 included. The 1 included. The 300 and the 200 included. Exchange differences not included. Transport to Joburg included. Selling costs allowed as a deduction but not included in the cost of trading stock. And what's the value of trading stock? 10,000 plus 1,000 plus 300 plus 200 plus 200. 11,700 is the value of trading stock at the end of the year. Okay, just moving on to the next illustration. Per section 22(1), trading stock is valued at cost less damage, deterioration, change in fashion, decrease in market value, and any other reason satisfactory to the commissioner. Inside the Act as well, it says that individual stock items may not be valued for tax purposes at an amount higher than cost. That's included in section 22(1) of the Act. Now, if you get trading stock in an exam, it says you hold 2 items of trading stock. Item 1 with a cost of 100 and then a market value of 80. So what you're going to do with item 1, guys, is that item 1 has to be valued at the lower of cost or market value. So it will be valued at 80,000 Rand. Item 2 has a cost of 50 and a market value of 90. So item 2, what are we going to value it at? Has to be valued. You cannot revalue it up in terms of section 22(1) of the Act. Therefore, your closing stock is going to be valued at 130,000 Rand. And having a look at the solution, there it is. Suggested solution to 1A. That's how you got to value your trading stock. Moving on in the notes. Disposal of trading stock. 2.1. It says when trading stock is sold, the proceeds and the disposal of trading stock are included in gross income. So, what's going to happen? This is your trading stock summary. Sale of trading stock, notes reference number 2. So the intention is that you'll learn off the summary later on. So here it is. Disposal of trading stock is included in 2. Let's see what you're supposed to do on the summary. Sales of trading stock are included in gross income. So there's a plus for income itself. And we're going to continually come back to this. Moving on. Basic trading stock rules. Purchase of trading stock. When trading stock is purchased, the deduction may be claimed in terms of the general deduction formula. So whenever we buy trading stock, we get a deduction. Looking here, purchase of trading stock, reference 3.1. Purchase of trading stock is deductible in terms of the general deduction formula at cost. That's why it's got a minus there when you're learning off the summary later on. Trading stock held at year end. Now, section 22(1) says that trading stock that's held at year end is treated as income. So, looking here, trading stock held at year end, reference 3.2. Trading stock held at trading stock at cost held by the enterprise at year end is treated as income. There it is. It's plus. It's added on as income. Moving on. Opening trading stock at the beginning of the year. Whatever the closing stock was last year is allowed as a deduction. So opening trading stock, which should be last year's closing trading stock, is treated as a deduction, section 22(2). Again, over here, opening stock that formed part of last year's closing stock, 3.3. Last year's closing stock is a deduction in the next year of assessment. There it is. It's a minus. Okay. So just going through this as a summary: sale, income; purchase, deduction; trading stock at year end, income; opening stock, a deduction. And you need to remember how to actually do all of this. So looking at illustration 3A. Trading stock of 40 is bought during the year. What are we going to do with that? It's going to be a 40 deduction. Opening stock amounted to 10. It's going to be a deduction of 10. Opening stock is treated as a deduction. Closing stock is valued at 20. Closing stock is treated as income. Sales totaled 70. That's treated as income. So if you add all of that, 70 plus 20 is 90. Minus 10 is 80. Minus 40 is 40,000 rands worth of income. And if you have a look in the solution, there's the 40,000 rands worth of income. This is the basic stock trading rules.